This is Paul Page at the Journal of Commerce. We're here at the NITL, IANA, TIA Transcom 2011 meeting. That's a mouthful. Talking with Larry Gross from FTR Associates. Larry, what's your assessment right now of what the economy is like? There's a lot of questions about a double-dip recession. What do you see now?
Well, we see that the odds of a double dip are actually declining, and we are quite confident at this point that barring an exterior shock, such as if our super committee fails to reach some kind of a conclusion and there's another risk of default on the part of the federal government, or if there's a lack of resolution of the European debt crisis, those are items that potentially could have an adverse effect. But in general, I'd say we're much more optimistic short term that the economy is going to continue along as it has been in a mild recovery type of scenario. Longer term, we are less optimistic simply because of the overhang of those kind of uncertainties like I just mentioned, as well as potentially the big one, which is China, and whether they're going to be able to engineer a soft landing from some of the overheated activity that they have going on right now.
What does that mean for shipping within the U.S. right now? We're actually seeing, I'm hearing here about relatively decent demand in this fall season.
Well, this recovery has been somewhat unique in that it has been an industrially led recovery rather than a consumer-led recovery, and that's been a benefit to the freight industry because the freight content of this recovery has been greater than has typically been the case in the past. So where GDP, let's say, is growing 2.5% in the most recent reported quarter, freight is growing faster than that, so the freight content is greater. This is a reversal from what has been true in the recent past, which is that freight was generally a lower growth component than GDP because of the heavy service and consumer content of our recovery.
What's your outlook for 2012, particularly for shippers, for carrier capacity and rates for 2012?
Our outlook is very heavily dependent on what the resolution of the current uncertainty with regard to federal regulation is. If
you're talking about HOS?
HOS in particular, there are a few other things that are also out there, but let's concentrate on HOS because that's the big uncertainty. The Federal Motor Carrier Safety Administration's new rule, will issue sometime within the next 60 days. It's at OMB now. It was put in there at the end of October. They have up to 90 days typically to render some kind of a reply. And at that point then the new regulation will issue. It's the subject of quite a bit of political pressure. Right. So there's that whole level of uncertainty there as to whether you might have action in Congress to negate it or not fund the new rule. Inevitably, there will be a court challenge, regardless of which way the rule finally emerges from the process. Somebody will not be happy with it, and there will be a court challenge. Then the question is, does the court issue a stay against the new rule? You put all of that together, and I think it becomes less likely that a substantive revision occurs in 2012. I'm not saying it's impossible, but it's certainly less likely, and if it does occur, it'll be in the second half of the year.
Right.
If the new rule emerges, is not stayed, and looks somewhat like the rule that was floated by the Federal Motor Carrier Safety Administration earlier this year, then the impact we think will be pretty severe, and you would see an acceleration of the shortages that we're just sort of getting the leading edge of right now. If, on the other hand, that does not occur, then we see more or less a continuation of the current situation.
Well, that current situation is that carriers seem to be, from what we see, pretty disciplined in their capacity. Is that what you're saying? And would you expect that, leaving out the HOS issue, would you expect that to continue?
We expect that to continue both because the carriers have become more disciplined in their approach, as well as the fact that the driver shortage that does currently exist makes it difficult for a carrier to expand capacity even if it wants to. Right. And there are still substantial issues with regard to the ability of the carriers to process new driver applicants and the processing pipeline that's available to generate new drivers, and there's a substantial amount of investment that would be required in order to significantly increase their capacity. And they're not willing to do that right now, given the high level of uncertainty.
It sounds like costs are going to go up in 2012. Is that a fair estimation?
Our assessment, we have a measurement that we do called the Shippers Condition Index, which is a sort of an all-in-one measurement that gauges the conditions for the shipping public, and that index has been declining. It went down sharply in the beginning of the year, then recovered somewhat during the summer when things kind of softened up a little bit and the capacity situation loosened, and lately has resumed trending downward. Now, whether it trends mildly downward or steeply downward, I think is a function of what kind of a situation we have on the regulatory side. But in general, we are not anticipating an improvement in that measure over the course of the forecast horizon through the end of next year.